I see the hands? Working in the finance department or CPA as an auditor, as an accountant, or as a manager, finance director, related sa finance, taas pa man. Lahat. 100%. Now, I want you to introduce yourself. There are a lot of bottlenecks, fights, pushbacks between finance, HR, operations, business units, because by education, by training, we are trained to record everything that happened in the past. Right? When you account something, that's why you account something historical data, right? But these people, they don't talk about history. They are forward-looking, especially risk managers, especially business development people. They talk about deals in the pipeline. What business, because they are reaching the target, which is futuristic. Now, if you talk about future, if they talk about future, and you are still accounting what is the history of this, give me the invoice, is it paid, then there is a clash. But what I like about this masterclass is we will not only master financial accounting and reporting, but we will also understand what is the mindset of the business people, why did they end up with this, why are they doing this, what is the mindset, and we will understand the game. That is the only way finance people will grow in the ladder of success. That's the only way. And that's what we are bringing to you today. Are you ready? Good. Roslyn? Correct. Right? So this is your, what is this? This is your capital. What are the sources of your capital? Knowledge.
Can be your own money.
Money,
Your own
or if you are the shareholder, we call it in the balance sheet as what? Equity. Very nice. What else? Loan. You borrow money from your mother, from the bank, from your friend. We call it debt. Mainly, these are the two sources of your capital. And what will you do with your capital? You will acquire machines, fixed assets, employ people, and so on and so forth. So you will have your operations. This is your, we call it result of your operations. After you purchase your equipment, your machineries, and everything, you generate certain transactions or certain, you have executed your transactions. You have your, during our time, we call it what? Income statement. Do you remember this? Or you call it P&L? You call it P&L? Pancho ha? Parang panahon mo yata yung P&L. So when we say P&L, income statement, result of operations, we are talking about the same thing. Now, when you talk about result of operations, you will have what? This is your, what is the end result of your result? Income. Net income. Okay? You talk about net income. You talk about P&L, income statement. Now, so you understand this. As a shareholder, you provide equity. Right? Now, when you prepare your balance sheet at this stage, you have what? You have current asset. I will not discuss what is current asset. I'm sure 7 and 8, you have mastered this, okay? You have fixed assets, property, plant and equipment, intangible assets, anything. Land, building. And then on the other side, you have what? Current liabilities. What else? Long-term debt or borrowings. And then you have stockholder equity. Now, you have total liabilities and stockholders equity here. And what you have here? Total asset. Clear? This is your balance sheet. Are we clear? Now, when we move to the operations, result of operations, when you prepare your income statement or P&L or results of operations, what are your line items here? What is the first line? Sales. What is other word for sales? Revenue. What is another word for revenue?
Revenue, sales.
Ano ba rin si?
No, I think.
No, di na. 7 ka. Asset turnover. Accounts receivable turnover. Because those balance sheet accounts are divided with sales. Are we clear? Because later on we will analyze this. The terminologies, you should be familiar with the vocabulary for you to master the language. Are we clear? What is the next line item? What? Cost of sales. Cost of sales or cost of goods sold. If you are rendering service, it can be cost of service. Now, what is your next item?
GP.
Gross profit or gross margin. In the bank, as a banker, when we say margin, it's always in percentage. Margin means something else for us as a banker. But for financial accountants, gross margin is similar to your gross profit. Okay? It depends on who is talking. If he's an American, gross profit. Okay. Then, what is the next line item? What? G&A, or sometimes we call it SGA, right? Selling, general, and administration expenses. Okay? Or sometimes we call it operating expenses. Galing ni Dong. Then, what's the next? So, gross profit minus OPEX. What is your next line item? Anna? Huh? Anong pangalan mo? Jimmy, congratulations. EBITDA. Okay? EBITDA. Earnings before interest and tax and depreciation and amortization. Now, when we analyze the business, this is very, very important. A lot of analysts are looking at EBITDA compared to the industry's EBITDA. Why? Why not net profit? Why not sales? Because when we talk operations, we talk about the result. What is the result of operations? EBITDA. 16 years ago, if I can remember this, pinanganak pa kayo 16 years ago, right? 16 years ago, when Amazon declared their EBITDA, EBITDA becomes, for the very first time, becomes positive. Their net income at the bottom line is still negative. But the entire Wall Street, they're celebrated their joy. Because for the very first time, EBITDA becomes positive. 16 years ago. Why do you think they celebrated? Anyone? because of dividends. So now, we're trying to make a new standard. EBITDA will be, dividends will be deducted from dividends? Or dividends will be deducted from EBITDA? Is that the way you construct your changes in the retained earnings? Remember, you have 6 components of financial statements, correct? Now, during our time, recently, in IFRS, they have added somewhere in between the so-called statement of other comprehensive income. Okay? Now it's 6. Now, why do you think the analysts celebrated their joy, the happy moment when they see EBITDA becoming positive? Why? Anna?
It's the true reflection of the company.
Okay.
Because if after tax, I think the tax you can still manipulate it.
After taxes and manipulate. Let's say that EBITDA is a manifestation of the success of the company coming from your sources of capital as a shareholder. You purchase some assets and equipment. You have operated as a company, and then you produce positive EBITDA. Meaning, what's the nature of the business of Amazon?
Online.
Originally, they are actually selling books online. That is the pioneering e-commerce business. When they see positive EBITDA, it means the e-commerce business has a great future. That was 16 years ago. I'm correlating financial accounting and reporting when it comes to the business, the mindset of a businessman. Now, I want you to have that kind of mindset. I don't want you to come here as an accountant and live here as an accountant. I don't want you to come here as a finance person and leave this place as a finance person. I want you to have that mindset of where is the business coming in? Who are the shareholders of the business? Who has skin in the game? Who has the risk? Who is taking the risk in the business? Okay? Now, after EBITDA, Gabby.
Depreciation.
Depreciation and amortization. Next is EBIT. Minus interest. Then you have earnings before tax. Minus, very easy, right? Then your net income. Following so far? Are you following? Now, what happened here? What actually happened here?
Nakategorize na yung mga...
Nakategorize. Okay, so what ko nakategorize?
Dati kasi nasa form na siya lahat. Sa Carine, parang nasa usual accounting.
So, Rowena, what is happening here? I want you to analyze this. Analyze it. Forget about your knowledge in accounting and financial reporting. Wear the hat of a businessman. What is actually happening here?
I think below down the line, because we don't have that much control on this like tax.
Okay.
We don't have
Okay. Then.
Interest.
Okay.
Same as I think depreciation and amortization.
Okay.
So up and above, we have the control. We can.
So you can say this is controllable.
Yeah.
This is not controllable on your demand and supply. It depends on the market. It depends on how they will respond to your products, right? So what is actually happening from here? from this,
Parang rate na din ang deduct yung mga fees.
very good, Rowena, that's not the right answer. Any guess?
Hindi siya
Any wild guess?
expenses
Most of
na
business
hindi direct
owners.
operation agad-agad. Parang yung
Yes, okay, yeah. Continue. Going back to where the business started. Who are the players in the capital? Who are the players? I'm giving you a hint. Who are the investors here? Who is this? Who is this? What's happening here? What's happening here? Tell me. Yes.
Before ko lang kasi na mag-start ng business, parang nakaset na kasi yung mga expenses na yan. So, regardless kung ano man ang amount down, hindi nila isipin kasi naka-project na as in din sa...
What do you mean regardless? What if you have a negative EBITDA? You mean you will not pay your bank? They will shut you down.
Yeah.
may business mo.
Fine. What's happening here is actually the result of your operations, whether it is positive or negative, especially if it is positive. Your business started with two shareholders, with two investors, one equity, one debt. Equity coming from shareholders, debt coming from creditors, or let's call it debt holders. Are we clear? Then you acquire those assets to generate income, to have your operations. That's in your P&L. Now, in your P&L, you have net income, bottom line. Right? Now, I tricked you. What you have learned is just fundamentally wrong. This is not net income. What you have here is EBITDA. Are you following? This is your pocket. This is the money that you have earned from operations. And when you have shareholders, logically from a businessman point of view, you inject money, you invest. What's the meaning of investment? Return. How much is the return for me? How much is the return? How much is the balik? You will never see a bank lending you money with zero interest. When the bank grant money to you, okay, I'll take 50% of the business. I'll finance this business. 40%, 60%, whatever. They will charge you, let's say, 12% interest. Right? They will charge you whatever interest. From an investor point of view, you are actually looking at how much is the return? Return on equity. What is happening here is from your EBITDA, you are actually giving out the return to those people who contributed the capital from the very beginning. That's why you have the assets to have operations. Now, from your EBITDA, you will pay off your bank, your debt holders, your creditors. From the EBITDA pocket, you say, after I have worked hard for the last 1 year, here is your share in the form of interest. You're actually distributing the return to whoever gave you the capital in the form of interest. Another player is the government. Can you consider the government as your investor here? And why do they take tax? Because they provide licensing, infrastructures, roads, the environment for you to, the safety and everything, right? So we pay tax. Whatever is left, there is a hole in the pocket. Whatever is left will go to shareholders. This is your net income. Are you following so far? This, what actually you're doing is, this is your, it represents your result of operations. It demonstrates your profitability. The business is doing good. Now, when you remove your depreciation and amortization, you're actually removing out the charges for your capital expenditures. Capital expenditure is something that is fixed. You already acquired the asset, it will depreciate in no matter what. Whether you do good in operations, whether you do or not the operations, you will still incur your depreciation. So this is actually your charges in your capex. Are you following so far? What is happening here? You're actually giving the return to one of your investors. You are paying your creditors in the form of interest. This is the return to your debt holders. Following so far? Now, this is the one you are paying to your government. Whatever is left, it will be to your shareholders. From a businessman point of view, you need to make sure you have a positive EBITDA. Correct? When you go to your bank and say, hello, Mr. Emirates NBD, I want to start a business, or I'm expanding my business, I want to apply for a loan. The bank will say, do you have a positive EBITDA to make sure you will be able to repay the interest? From a business point of view, from a shareholder's point of view, you need to make sure you have sufficient EBITDA so that after you remove the interest, pay off your debtors, your creditors, your debt holders, after you pay your government tax, there is something positive coming in here. That's the business mindset. Are you following? Now, will this be the return for the shareholders? Is this the return for the shareholders? Who says no? Can I see your hands? Who says no? This one will go to your stockholders' equity in the balance sheet. Clear? Now, from the income statement, from the net income, you will deduct your dividends. Whatever is left, that is your ending retained earnings. Correct? This is your retained earnings to be added to your stockholders' equity. This is the one that will be pocketed by shareholders. Are you following? Now, what is happening here? Tell me. What is happening when you? Equity has been contributed by the shareholders, now you're giving it back. When you retain certain earnings, a portion of your earning, what is actually happening is, what is again your balance sheet? You have current asset, you have fixed assets, then on the other side you have current liabilities, long-term debt, and then you have stockholders equity section here, correct? Then, what is happening here? You have a retained earnings coming in. That retained earnings is coming from your net income minus your dividends. Are you following? Are you following? Now, when you retain certain earnings and move it to shareholders' equity, what is actually happening? Can you explain it to me? What's happening? Instead of pocketing the entire net income, you are saying, no, I will retain certain portion so that it will be used and utilized to further and increase or grow the business. When you increase your right side here, there must be an increase here as well. Balance sheet. That's why it's called balance, correct? When you increase this from your retained earnings, what will happen to this? It will increase. Maybe it will go here, or you have reinvested it back. Now, question. If you put your retained earnings in too much cash, what will happen to your current asset? What will happen to your current asset? It will increase, and then? And what will happen to your cash? It will increase, and then? So what? From a businessman point of view, guys, don't forget, I am a businessman. I'm not an accountant. Tell me what's happening in my investment.
More chance of acquiring more asset or the additional operation.
More chance of acquiring more assets. So if I put my retained earnings to the current asset, will I earn more?
Yes.
Will it how? Will it increase my my return as a shareholder? Where? Where will I invest my money? Equipment? Where?
Kung saan makapag-produce dun sa moral sales.
In the asset that will produce more income.
Yes.
Because if I say we are in the business of, let's say, Philippine Business School, and I say, Mr. Businessman, Mr. Shareholder, I invested our retained earnings, the income that we had from last year after deducting dividends. I have purchased one private jet. We are in an education business. Where it will go? To the fixed assets. Will that fixed asset generate more income for me? No. So from a businessman point of view, you're actually looking at where will I invest my money to generate more net income. Are you following? Going back to your income statement, you will increase, you will grow the operations so that it will have higher EBITDA year on year, so that I will pay my interest, so that I will have an increased multiples of my EBITDA to cover my depreciation, my interest, and there will be something left for me in the net income. Make sense? Does it make sense?
Yes.
Now, fixed assets. When you invest in your fixed assets, do you think you will need additional funding from the bank, from your debt holders, or you will just roll over the retained earnings year on year to generate higher operations, more assets, growing operations, growing sales, and so on and so forth? What will happen?
Case to case.
Case to case. It depends. Now, depending on your analysis here, depending on your results of operations, depending on the result of EBITDA, and I will tell you later on, what if this is negative? Now, going back to this, what have you noticed here? The tax is actually based on earnings after you deduct your interest. The government is taxing who? The shareholders. Right? Is he taxing the debt holders? Huh? In this case? Is the government charging you any tax for lending money in this case? No. Because the government is actually computing the tax based on the earnings after you remove your interest. Meaning, whether you lose or not, whether you have positive EBITDA or not, whether you pay your government or whatever your arrangement with the government as a creditor, as a lender, as a debt holder, I will get my interest. This is fixed, guaranteed, more or less. Now, why do you think the government is charging only the shareholders but not the creditors? Why?
The banks tax persons.
Hmm?
They have their way to tax these banks.
So, what's happening? I want you to think.
They are encouraging
What is the composition of your sales? What is the composition of your sales? Selling price times quantity. Who decided on this? The management, the company, not the creditors. The creditors say, "Oh, this is my money. You do whatever you want to do, but at the end, you pay me this interest." Right? This is within the control of the company. Now, everything here is within the control of the company. How much you spend, how much you incur, how much you pay, everything. Who used the infrastructure of the government? When the bank lend you money, did they use any facility of the? Did they use the land, the roads, the infrastructure? No. You are the one who used the infrastructures of the government. That's why you will be paid. You will pay tax. Now, when it goes to the balance sheet of the bank, then there will be capital gains tax at their books. Are you following? Make sense? Now, any question here? Does it open your eye now? I want you to start the day with a businessman point of view, with a businessman hat. Always think from the businessman perspective. That's how you grow as a finance person. Clear?
Yes.
Clear?
Yes.
Now, I have taken so much time for a very long introduction. We cut cost. How can we make competitive advantage in the business? Now, before I end, there are 4 phases of finance department. 4 phases of finance or a CFO. Ultimately, your role will go up to the CFO level. If not, you will become a CEO. Okay? Now, I want you to have that kind of perspective that, guys, I'm not restricted or I'm not confined with the finance role, but rather, I want to take more. I want to grow. I want to go up to the ladder of success. Now, you need to understand the 4 phases of finance department. Number 1, you need to be a strategist. You need to understand, where is the business going? Where are we heading as a business? I know I'm taking more time, but I hope it's a very good opener for you, eye-opener for you, that you are not confined with your role right now as a finance professional, but wear the hat of a businessman. Where is the money coming from? How can I have more return, higher return? What are the issues of operations? How can I become a strategist? Now, when you talk about strategies, strategy is actually collected choices. Collected, I can do all of this, I choose this. That's a strategy. For me to have economic value. When you say economic value, it means you're not only satisfying the needs of your customers, but actually you are differentiating yourself from the competition. Okay? So that's what we call competitive advantage. Okay? When you talk about competitive advantage, you talk about 2 things. You acquire competitive advantage in the form of differentiation. You separate yourself from your rivals. They do A to Z, you do A to Z plus 1 to 10. That's differentiation. Apple is very good in making themselves different. Okay? By simplicity, by, simple stuff, user-friendly gadgets. Their marketing is very simple, easy to understand. Differentiation. The next way to be competitive, to have competitive advantage is the so-called cost leadership. Now, going back to your income statement, right? Where you have OPEX, you have cost of goods sold, cost leadership. Something that they can produce for 5 dirhams, you can produce in 1 dirham. So if I'm the buyer, I will get the same product either from you at 5 dirham or I will get it from you at 1 dirham. Where do you think I will go? Who is the cost leader? Number 2, you need to be a catalyst. When you say catalyst, you pioneer change, you promote change, you encourage change. You're not stuck with the history. You talk about culture, you talk about people, you talk about systems. What can we change? How can we improve? As a finance person, I want you to have that kind of mindset. Number 3 is you must be a good operator. Meaning, when you look at your business, do you know what is the nature of your business? Do you know how you make money? Do you know how you develop your product? As a finance person, or you just account how much is the invoice, how much is the AP, accounts receivables, or account the revenue or sales, or you really understand what are the pain points of the operations people? How can they cut certain costs? How can they increase the quality by retaining the cost? How can they remove some unnecessary costs? Do you understand this? As a finance person, I want you to look at this. And the last is I want you to be a very good steward. When you say steward, you're actually a very good shepherd of your assets. You account your assets, you prepare financial reports, you account everything. There's no imbalance balance sheet. There's no debit, credit, and cupid. So that's steward. Making sure you have proper controls, making sure your assets are safe. No stealing, you have CCTV camera, no, the cash is always intact, properly reported. You are a very good steward. Thank you very much for a very short introduction. I hope it helped.